Live stream has commenced.
Okay, we have the forum. Let's start in that. Good afternoon and welcome to this virtual meeting of the Audit, Finance and Risk Committee of the Toronto Senior Housing Corporation.
Is it just me or is I can hardly hear Lawrence?
Yeah, I'm the same. I'm finding it a bit hard, Lawrence.
Okay, let's start again with that. Please. Good afternoon and welcome to this virtual meeting of the Audit, Finance and Risk Committee of the Toronto Senior Housing Corporation, which is being live streamed. In addition to the participating board members and the leadership team, I'm pleased to welcome our virtual audience and thank you for joining us. I want to thank Grant and Vince and his team for the preparation of the materials brought forward for today's meeting. We have a full agenda today. Vince will provide us updates on the financial health of the corporation as of 30th September 2022, renewal of various insurance coverages, and the proposed 2023 budget. You hear properly now?
It's not good.
Oh, I'm trying my best. Okay.
It's not you, I'm sure.
Okay. Let us start with the Land and African Ancestral Acknowledgement. As a committee of the City of Toronto Corporation, we honor the land we are on, which has been the site of human activity since time immemorial. It is the traditional territories of the Huron-Wendat, Anishinaabe, the Chippewa, the Haudenosaunee Confederacy, and most recently the Mississaugas of the Credit River First Nation. Ontario is covered by 46 treaties and other agreements and is home to many indigenous nations from across Turtle Island, including the Inuit and the Métis. The committee also acknowledges that Toronto is covered by Treaty 13, signed with Mississaugas of the Credit, the Williams Treaty, signed with multiple Mississaugas and Chippewa. These treaties and other agreements, including the One Dish with One Spoon Ransom Belt Covenant, are agreements to peaceably share and care for the land and its resources. Other indigenous nations, Europeans, and newcomers were invited into this covenant in the spirit of respect, peace, and friendship. We are mindful of broken covenants and we strive to make them right with the land and with each other. We are all city people. Many of us come here as settlers, immigrants, and newcomers in this generation or generations past. We would also like to acknowledge those who came here forcibly, particularly as a result of the transatlantic slave trade. Therefore, we honor and pay tribute to the ancestors of African origin and descent. May I now have a motion for approval of the public address?
So move, Mr. Chair.
Can you second? Would you like to second?
Yeah, I can second. Thanks. Sorry.
Carried. Next item is declaration of conflict of interest. Does any member have any conflict? Hearing none, let us move to the next item. That's item number 5 and 6. Approval of the public and closed session minutes of this committee's meeting held on September 20th, 2023.
So move, Mr. Chair.
By Warren and seconded by Cody. Any opposed? All in favor? Carried. Then next will be item number 7. This is the action item. This week.
No comments.
Yeah, okay. I'll just say Vince has provided me with the additional information we had asked for. As for the improved reporting template, we can implement starting with the next financial year. By then, we will have audited numbers with the bills and some certainty regarding the other numbers. Okay, next is item number 8. That's the financial update, statement of operation for 9 months ending September 30th, and the statement of financial position 30th September.
Thank you, Lawrence. So today I'm going to present to you the financial results up until September 30th of 2022. Through September 30th, 2022, TSHC has incurred operating expenses of $15,309,089, and revenue amounted to $15,309,089, composed of $3,493,801 from the City of Toronto and $11,730,662 from TCHC for TSHC's rental units, which includes expense estimate per their transition agreement, and there's a $80,626 interest income earned on bank balances. Expenses incurred were for staff compensations and benefits, TSC lead consultants and other third-party vendors in insurance, transportation, communication, computer services, and other miscellaneous costs and shared services paid to TCHC per the service delivery agreement. The City of Toronto revenue grant recognized at 3493,801 from a budget of 5097,576, with a positive variance year-to-date of 1603,775. The positive variance is a result of lower than expected legal and professional services due to the delay in the lease agreement, lower payroll and benefit costs due to a hold on hiring of the approved corporate positions, along with reductions in software licenses, travel, conference, and other non-payroll related expenses. Salaries and wages, including benefits, were higher by $273,000, mainly due to ISM Phase 3 and overtime related to COVID cleaning. In terms of the professional services insurance, we were lower by $659,000 versus budget, mainly due to legal consulting services and timing of expenditure. Revenue recognition for corporate and operations expenses are recognized when expenditures have incurred. The unrecognized revenue is on the balance sheet account, attachment number 2, under deferred city grant corporate expense, and also under the deferred revenue from TCHC operations. Hereby, I would present you for attachment number 2 on the statement of financial positions. Cash, we have a total of $7,049,824. HST recoverable of $98,517. Accounts receivable of $25,051. We also have some prepaid expenses, accounts payable, and also deferred city grant funding, as I noted earlier, and also the deferred revenue from TCHC as well. The cash balance represents the bank balance as of September 30th, 2022. The HST recoverable is the amount to be received from the CRA for HST paid in August and September for services. The accounts payable balances comprises of the following activities, which included payroll of almost $600,000, $596,000, pension at $702,000, HST payable at $439,000, and interim staff and seconded employees and remaining accruals of about $457,000 overall. So I present to you both the attachment 1 and attachment 2 of the financial statement.
Thank you, Will. Question for Will. Warren? Warren, do you have any questions for Will? Reid, can you hear me?
Yeah, I can hear you. It's a bit. Yeah, I don't have any question.
I have a couple of questions for Will. I assume the reconciliation with TCHC complete as of 30th September?
Correct. The result does not include the reconciliation. The reconciliation only provides an estimate. If I hear you correctly, we do have the reconciliation up until June 30th, but the amount has not been adjusted per the reconciliation.
That was what I wanted to know. So these adjustments have not been incorporated in this financial statement as of 30th September, instead of up to 30th June, right?
Correct, yes.
That means July, August, and September adjustments will take place in the next quarter.
Yeah, so the result provides from the June reconciliation, the reconciliation is essentially from the year-to-date 4 months of operations from June, July, August, and September. And that 4 statements will be part of our discussion in the in-camera session.
And next one is, that cash balance of 7 million. In what form it is? Is it GIC or any other investments?
Yeah, the cash balance is strictly on deposit. We do not deposit anything outside of our main operation. So they are at the regular rate, regular bank interest rate, although we are getting one of the better preferred rate per the municipality and through the government. So our rate is actually slightly better than your normal average rate if you would deposit at the bank, but we simply do not place the funds outside of our main bank account at this point.
It's essentially a current account or
Yeah, it's on the operating account, correct? Yes.
thank you.
Welcome.
Let's move to next item. I think we need a motion to recommend these financial statements to the board for information. How do we need yeah, sorry.
Yeah, thanks, Lawrence. Yeah, I so moved.
Move
I can second.
all in favor? Okay. So next is item number 10. That's the revenue and expenses forecast as well as the cash flow projection, the financial year, December 31st.
Lawrence, you're still cutting in and out. I'm not sure.
Yes, I'm trying to get on and using another device to see if it helps. That's why you don't see my video right now. I can hardly hear Lawrence.
Oh, let me try. I think I have to try my headphones.
Yeah, when you're like that close to the computer, it sounds great.
Okay, so I think I'll still closer. Okay.
Yeah.
Okay. Sorry, Bill.
Okay, so we're going to present you for item number 10, which is the financial updates. And in the financial updates, I will present to you the 2022 forecast presented in attachment number 1. TSHC is projected to finish the year with a surplus of $1.267 million, of which 1.069 is generated from TCHC. The amount is subject to reconciliation with TCHC, of course, which has to be repaid as per the transition agreement. The balance of the surplus, $198,000, relates to the interest income earned from the city cash advance and a small operating surplus for the year. Underspending of the City of Toronto grant is due primarily to the timing of the recruitment.
Vince, you're cutting out.
Yeah, can't hear Vince.
Nope, can't hear you. Maybe try taking your headphones off, Vince. I don't know what's happening. We still can't hear you. You were very clear, and then all of a sudden you just cut out. Not having much luck with the technology today.
Oh,
It's the pits.
Hello?
Yes,
Okay.
Vince.
Yeah.
Go
Okay.
back.
Okay, so sorry for that. I'm going to present to you and discuss the attachment number 1 on the forecast. I was referring to earlier, revenue of $27.3 million, of which 5.5 came from the City of Toronto. The remainder, $21.6 million, came from TCHC. TSHC's portfolio calculation based on the estimated budget revenue less operating expenses related to the properties such as utilities, mortgages, property taxes, etc. Total expenses of $26.1 million, consisting of salaries, benefits, professional services, and corporate costs. Supplies and shared services with TCHC. Included in the salaries of 16.9, $15 million is for operations and 1.9 is for full-time corporate staff. Total services for the year is $3.6 million, of which I must have jumped, of which $2.2 million is for intern staff and consultants, $430,000 is for legal and audit services, $370,000 for insurance, $198,000 for communications and related expenditure, and the remaining costs make up the balance, including hiring costs, training, development, union arbitration, admin, including conference travels, and supplies and other related costs. So the bottom line is we're going to be projected to come in $1.267 million, slightly off, about $46,000 off from the earlier planned. Again, the significant amount there is really on the salary, as I mentioned to you earlier, has to do with the fact that we're absorbing ISM phase 3 and also the COVID cleaning as a result of that as well. Moving on to the cash flow balance. We projected to, based on the projected cash flow, TH will have a sufficient cash and working capital through to December. Cash flow support or confirmation of a letter of guarantee is projected to be required by December 15th. So right now at this point, we are projecting to have a negative cash position if we are to repay back the amount to TCHC of $1.069 million. And also, if in the event that the City of Toronto on the grant, they recall the grant, then we are expected to pay back $2.1 million. In the worst case scenario, we will have a deficit of about negative $1 million by December. So we're asking to get the letter of guarantee out by December 15th with the approval, so that for us to be able to submit to RBC as a letter of as a loan, letter of credit, line of credit, sorry, in the event that we need to cover for funds in the coming weeks and months. As of right now, we have not discussed further with the City of Toronto. They are aware that we will be in a low cash position, and occasionally we have talked to TCHC has mentioned a couple of times to see if we need support, but at this point we are at a good position. However, in the course of between a month or 2 months, we will be at a low position. The biggest component of that is on the insurance piece, which will need to be paid out in the next by the end of this month, along with some other expenditure that will need to come through as well. So we are looking to get that piece of the letter of guarantee to the city after the submission of the report. On top of that, the Q3, the next item on the list is on the Q3 TCHC reconciliation. Is there any questions relating to the cash flow or on the forecast?
Through you,
Yeah.
through the chair, Vince. This is a minor correction, but I think the legal and audit costs are showing as $430 to be $430,000. So it's just a typo for your own benefit. The more substantial question I have is that if we are projecting a worst case scenario of cash flow being in deficit to the tune of $1 million, and we owe $1.06 million to TCHC. I mean, it's one corporation, one shareholder, rather than being in a negative cash flow position. Isn't an option to retain that 1.06 that we owe TCHC? And then a follow-up question would be, would we need the letter of credit even if we are not in a negative cash flow position?
So yes, so to go back to your question, definitely I would agree. I mean, the amount of $1.069 million, it's very unlikely that we'll pay that at the end of December because we will have to go through the reconciliation process as well. However, I would anticipate that they could recall that amount simply because it is a surplus that we record on our book. But in terms of the actual cash outflow, it might not be in the month of December. So certainly we've asked TCHC to see if we can retain that as well. On top of it as well, there are some money owing to us potentially. We have not settled the vacation and lieu time accruals, which is expected they will owe us about $1.2 million on that amount. So I would anticipate that we might be able to sort of even things out, if you want to call it. If worst case scenario, there's no impending cash coming through. With respect to the letter of credit, line of credit, I think the line of credit is a way to sort of protect us in the event that something happens. We will get that funding to come in to do payroll. The biggest significant for us is really on the payroll, which in this case here on a monthly basis, we require about $2.3 million in total. So that would help with ease some of that burden. In 2022, we received 2 tranches of funding from the city. One was through in January, I believe, of last year, and the other one was in June. So I would anticipate that we will have something a bit similar, but I think that arrangement will be discussed further as we provide them with some sort of attachment as a letter of letter of guarantee, requesting the city to provide some sort of assurance on that basis there.
Okay, thank you.
Thank you, Vince. I think December end, as of December 31st, it will be just a book entry, probably not actual transfer of surplus funds.
Mm-hmm.
Anyway.
I hope that's the case, Mr. Chair, since we don't have
Yeah.
a transitions agreement signed.
Yeah, and I think through you, Mr. Chair, I mean, I also worry about the term you're using, which is surplus. It might be an accounting surplus at this stage, but we are projecting a deficit, right? So I think I just get worried when we talk about surplus when it is in true fact not a real surplus.
At this stage, I think these are all estimates for a certain number of months. So, as I said, reconciliation has been done as of 30th June, and they've been incorporated. So probably, as I said, after December 31st, the reconciliation will be done, and then probably it will be incorporated into this subsequent quarter, I believe. Vince, is it correct?
Yeah, so we're still planning out the timeline. We would anticipate that we will probably get the Q4 in December, probably by the 3rd or 4th week in January. That is the timeline that we've been expecting in terms of a reconciliation. So after that date, they could recall things if they're in a worst case scenario. But I think that most likely scenario, they will not recall. But like I said, anything could happen because the transition agreement is entitled to for those funds and services.
Probably it will depend on their financial position as well.
Correct.
Thank you for that.
Okay.
If we don't have any further questions, may I have a motion to recommend these 2 statements to the board for information purposes?
So move, Mr. Chair.
Moved by Warren and seconded by Fareed, and all in favor, carried. Let's move to the next item. In that case, it's item number 12. That's on insurance renewal, update on insurance renewal. Vince.
Yes. So the purpose is for the approval. I was recommended that the board of directors adopt the following resolution. The insurance policy for the corporation building will expire October 31st. We have received some amendment and some opportunities to move that to the end of the month. The Audit and Finance Risk Committee has reviewed and compared the various insurance coverages and has recommended the corporation renew its insurance with its current insurance provider, HSC Insurance. And due to the fact that the expense is actually higher than the threshold of $500,000, we will require the board to approve the services here. Attached, you will find essentially two invoices, one for $613,000 excluding taxes, and then the other one is for the excess crime insurance premium for $37,000. Total is $650,000 plus applicable taxes. And just a quick note on that as well, the second excess liability, which is from $30 million excess of 20, was invoiced earlier in the year, and we actually bought that for almost a 16-month or 18-month term, if you want to call it, and that coverage will expire in November 1st of 2023. So the core component of it is $650,000 for the next year, but there is that component that falls for the excess umbrella, which we've already paid at this point. And so attached, you will find attached 1 and 2 is for the invoice related to those services. And then attachment 3 is just provide you with an overview in terms of what our coverage is, outlining our the overall amount and the premium as well associated with that.
Thank you, Vince. Any questions for Vince on that?
Yeah, through you.
Yeah, please.
Sorry, go ahead.
No, you go ahead
Through
first, Fareed.
Yeah, thanks. Thanks. Appreciate it, Warren. So through you, Mr. Chair, to Vince, I see that there is no directors or officers liability insurance. Is that because there is coverage by the city? I mean, what's the view there?
You're 100% correct there, Fareed. It is the DNO, the Directors and Omissions liability, is covered through the City of Toronto.
All right, thanks.
Warren?
Mr. Chair, if I may, just I guess one observation: the form of resolution. I think you should make another recital to make it clear that the insurance coverage has continued after October 31st. I assume that you have made such an arrangement. Secondly, just curiosity, what is excess criminal insurance?
The excess criminal crime insurance covers a gamut of essentially. I cannot 100% answer that question for you, but I know that coverage was part of the recommended amount that was outlined earlier through HSC. But I can certainly get back to you and provide you with more specific detail on that coverage. But it is an added insurance that I think was proposed, and this would basically cover anything in excess of $5 million of 100,000. But I can certainly get you back more information as it relates to this particular details of the insurance component.
Thank you, Vince. That would be appreciated.
Vince, I have a question. There is a 52% increase in the premium for first excess liability. Any reason for that?
Well, the costs, we went back on a few occasions with it, and the cost for replacement of a lot of these products have actually increased. And just due to the fact that the inflationary pressure has been high, we did go back and, comment at the fact that our, claim history has been pretty, has been nothing negligible at this point. However, it is a industry-wide practice for them to have that increase just based on inflationary pressure. But we will certainly continue to review what our claim history will be. And I would anticipate that there will be expected some sort of level off in the future year. But as you and I might not be fully versed in the industry itself, I can say that, last year there were a number of other factors that could arise out of all of this. But our specific requirements when we went back to HSC was, there's no basis for that increase. But they did mention the fact that inflationary was the major component of it, and also industry-wide, that they're feeling the pressure, and therefore there was a 9% expected increase overall.
Thank you. Tom, you would like to say?
Great, through the chair. So I'm no expert in the area of insurance, but I just want to share with you, I was at a recent meeting in Ottawa with the CEOs with HSC, from other CEOs from other organizations that was led by HSC, and the insurance came up. And so there's incredible instability in the insurance market right now. And HSC was sharing that and I can't remember which company it was, but there was a company that refused to provide insurance to 70 not-for-profit housing corporations, companies, organizations, and so those came to HSC looking for insurance, of which they, over a couple of weeks, were able to provide it to 50, and so. I mean, as I said, I'm not an expert, but there's just incredible pressures around even getting insurance for housing these days. And so my sense was, even at 9%, we were fortunate with that number. HSC was kind of very, very aggressive, and they have a particular model that they use, around trying to minimize, escalating costs. So I just wanted to kind of share that for information, that it is a pretty volatile space right now.
Thank you, Tom. Yes, I do agree with you. I have read in the newspapers about it.
Yeah.
Okay, thanks. We don't have any further questions. Oh, Warren, by the way, you wanted to amend that motion because the last sentence, talks about.
Mr. Chair, I just thought
Yeah.
that, there's a gap. But,
Yeah.
the resolution has a recital that insurance was in effect October 31st or whatever the date is.
Yeah,
And
because
here we
last-
are in middle of November. And so what's been the story for the last 2.5 weeks?
So, Vince or Tom?
Well, I just wanted to put a big note as well. If you look at closer towards the bottom on page
last line.
last line, yeah. So it has granted extension of payment of the invoice to November 30th.
Yeah, the last line talks about insurance provider has granted an extension of payment of the invoice to November 30th, 2022.
I guess if there's an extension of payment, coverage has been extended, although I don't know.
It has been.
If that is the fact, can we amend or add that sentence? Subject to that, we can approve this motion.
We would just confirm that the coverage is in place, the extension to the end of November, that the coverage was in place.
Okay. So subject to that, can we have a motion to recommend to the board for its approval the renewal of insurance with the current service provider for the period 1st November 2022 to 31st October 2023 with the associated insurance premium? And Farid has moved, and
Second, Mr. Chair.
second by Warren. All in favor? Carried. Okay, next, let us move to item number 14. That is the audit timeline and the audit engagement letter. Vince again.
Thank you. Thank you, Chair. So we have, it's recommended the Board of Directors adopt the following resolution. It is resolved that the Board Chair sign the audit engagement letter from KPMG in the audit fees associated with the engagement. The 2022 audit is scheduled for February 21st of 2023. It expected to take 1 to 1.5 weeks to complete. KPMG is the assigned auditor for TCHC, and TCHC received audit service in 2021 from KPMG. As noted in the attachment number 14, it goes through a number of detailed notes in terms of what they're going to be doing in terms of service, and also the fees associated with it. We were able to renegotiate the fees from 18,000 down to 15,000, given that the scope of work is not as extensive, because 7 months of the operations resides with TSHC, and the other 5 months is with TCHC. And a lot of the services that we deal with is through a shared services agreement. Therefore, the time and the requirements doesn't require such an extensive timeline. I think we originally budgeted about $25,000, but I think 15,000 is a fair assessment, and that's the solution that we pose to the board for approval.
Thank you, Vince. Any questions on that, Warren or Fareed?
Vince, with respect to the engagement letter from KPMG, did you guys request any changes to it? Or is that basically the standard form KPMG engagement letter right now?
Yeah, so we did review the scope of work and also the requirement. In terms of the letter itself, it was a standard letter, but also through KPMG, it's been assigned from the city as a sign auditor through all the agencies and all the organizations that work with the city, that they use KPMG as the main auditor. I've reviewed it from last year's statement as well. It looks very consistent and very similar, with the exception of the price, which is 15,000.
Thank you.
Fareed, do you have any questions?
No, thanks.
Okay. In that case, can I have a motion to recommend to the board for its approval that the board chair sign the audit engagement letter from KPMG and the
So
audit
moved,
fees?
Mr. Chair.
The engagement, yes. Moved by Warren and seconded by Fareed. All in favor, carried. Okay, it's time for us to move to the closed session. So I need a motion to that effect.
So moved, Mr. Chair.
Moved by Warren and seconded by Fareed. Will you second that? Yes, and then carried, and we'll move to the closed session.
Live stream will pause momentarily.